Inside the MBA, your bi-weekly window into what's happening at the MBA.
Hi, I'm Rob Van Rapphorst. Welcome to MBANow. I am here with Karen Kreutziger of Flat Branch Home Loans. She is CEO of the company, and we're here to talk about the value of an MBA membership. Karen, thank you so much for being here.
Thanks for having me, Rob.
Talk about why being an MBA member helps your company.
Yeah. So our MBA membership is vital to our company because the MBA is our voice in Washington. This allows us to focus on running our company and ultimately supporting our customers. The MBA then focuses on the bills and legislation in Washington and making sure that it doesn't negatively impact not only us as a small lender, but the industry as a whole. And I know that as individuals, we should be involved in the advocacy and meeting with our elected officials, but the MBA does a great job of keeping us informed of the issues and ultimately letting us know how to take action.
And these advocacy wins, I mean, they really are beneficial, aren't they?
Absolutely. The best recent example for us is the work the MBA did advocating on the IRS tax rules that allowed IMBs and community banks to take advantage of the pass-through deduction in the 2017 tax reform. Congress allowed the tax deduction for S-corps, LLCs, and partnerships to give them tax relief comparable to the rate reduction that C-corps already get. And ultimately, the problem came when Congress wasn't clear on what companies were eligible to take advantage of the deduction. This is where the MBA was invaluable to us. They wrote commentary letters, they met with Treasury officials, and let them know that the IMBs are no different than other lenders and community banks and should be eligible for the deduction. The MBA was the only voice we had at the time, and they got the job done. Ultimately, the tax savings we had in 2018 alone were enough to not only pay our MBA dues several times over, but also invest back in our company.
Yeah, and if that language wasn't included, it would have negatively affected consumers, right?
Definitely. A lot of people don't realize the consequences, but it would have created an unlevel playing field for lenders solely based on the type of ownership their company had. For us as a small lender, it would have been detrimental. We would have had to have raised our costs to consumers, and it would have been harder to compete in the markets we serve.
Well, thanks so much for stopping by and talking about your company. I mean, you're doing great things. We really appreciate it.
Yeah, thanks for having me, and we want to say thanks to the MBA and the Mortgage Action Alliance.